Welcome to the Moving Markets podcast on Tuesday, the 17th of March, with me, Bernadette, and Anderko. The war in Iran is in its third week, and its effects continue to be felt in financial markets as well as, of course, as everywhere else. This morning, my colleague Mike Rauber will be bringing us the latest markets news. But aside from this, another headline that I spotted over the weekend was that India's Science and Technology Minister was addressing a summit in New Delhi, saying that India is entering a transformative era of both personalised and precision medicine powered by genomics, AI and advanced biotechnology. And in fact, it's not just India that's focusing on this sector of medical technology. China now conducts more clinical trials than the US and leads global biotechnology patent filings. I'm going to be talking about this sphere of medicine to one of my next generation research colleagues, Damien Ng, and we'll be talking about how new developments are offering opportunities for investors as well. But that's, of course, after my conversation with Mike. Good morning to you, Mike.
Good morning, Bernadette.
So we saw a bit of a rebound in equities after several days of declines, but the underlying tensions certainly haven't disappeared, have they? Perhaps you could talk us through the major themes.
Yes, so yesterday began with cautious optimism as oil prices retreated. Brent briefly rose above $106 a barrel before reversing to around $100 a barrel, and that was enough to lift sentiment. The International Energy Agency signaled readiness to release additional emergency oil reserves, and Treasury Secretary Bessent indicated the US would not oppose continued transit by Iranian, Indian, and China vessels through the Strait of Hormuz.
So a slight cooling off in the immediate oil situation has allowed for a breather, but how did that translate into performance across different regions?
Europe reversed early losses, with the Euro Stoxx 50 closing about 0.5% higher, led by energy and real estate. In particular, company news, Commerzbank jumped nearly 9% after UniCredit, so the Italian bank, moved to raise its stake, potentially paving the way for a full takeover. And in the US, the S&P 500 and small caps gained around 1%. Driven by strength in artificial intelligence shares, Nvidia advanced 1.6%.
Yeah, and of course, Nvidia is continuing to dominate headlines. Their annual conference seems to have generated quite a buzz.
About 30,000 people, so we're talking a rock concert kind of event, attended Jensen Huang's presentation, where he raised Nvidia's sales outlook for its Blackwell and Rubin chips to $1 trillion through 2027. Now, that's more than double the company's previous estimate. He also announced a deeper push into central processing units and introduced semiconductors using technology acquired from Grok. He even said Nvidia is developing chips for space-based data centers and announced new or extended partnerships with IBM and Adobe. Jensen Huang even described robotics, a 50 trillion industry. So certainly the company sees a lot of opportunities out there.
Yeah, and on to another stock, Meta Platforms saw a rise of more than 2%. That was linked to planned layoffs affecting potentially 20% of the workforce, according to a Reuters report.
Yeah, the company hasn't reported that or has not confirmed this report so far, but analysts took the report positively, taking it as a signal that AI, so artificial intelligence, is delivering genuine productivity improvements, a topic coming up more and more, allowing Meta to streamline operations. Cost-cutting measures are also seen as offsetting the substantial investments being made in AI development.
All right, so why don't we talk about broader asset class movements? What caught your eye in fixed income, currencies and commodities yesterday, Mike?
Treasury yields, they declined alongside oil prices yesterday, alleviating some inflationary anxieties just ahead of the crucial central bank meetings this week. Consequently, the dollar weakened slightly. Gold remains relatively stable, but in contrast, Bitcoin surged past $73,000 and again higher today. It's benefiting from renewed interest as it has outperformed gold since the start of the Iran war.
And looking towards Asia this morning, Mike, how are things shaping up there?
Mixed. So Asian markets opened higher but are now mostly flat, though South Korea's Kospi is up 1.6% on the strength of Wall Street's AI rally. Samsung is rallying over 4% as Jensen Huang, Nvidia CEO, mentioned the company as producer of its Grok AI chips. But overall, the mood is a little subdued in Asia. First, oil prices are climbing again this morning. Brent is near $105 a barrel when I last looked. Now, that's after Iran targeted Persian Gulf infrastructure this morning. In related developments, the Japanese yen is weakening further, approaching 160 per dollar, underscoring Japan's dependence on imported energy. And the other big news this morning is President Trump has requested a roughly 1 month delay to his planned 31st of March visit to China to meet with President Xi Jinping, because President Trump says he wants to oversee the war with Iran and does not have time for the meeting right now.
Okay, we have to touch on monetary policy, don't we? It's a central bank heavy week. Australia's central bank met today and hiked rates as broadly expected.
Yeah, so the Reserve Bank of Australia raised interest rates by 25 basis points to 4.1%. The bank cited a robust labor market, but also acknowledged that sustained high fuel prices would exacerbate inflation. However, the decision was not unanimous, with 4 dissenters, so 4 members of the central bank voting against the rate hike. Now, that's causing the Australian dollar to weaken.
Okay, what else should we be looking out for today, Mike?
It's a light day in terms of economic news. We get Swiss producer and import prices and Germany's ZEW economic survey later this morning. And otherwise, of course, the focus will be on Brent oil prices and President Trump postponing his meeting with Xi. That means also European equity futures are seen lower this morning. And that's all from me.
Great. Thanks very much for the news update this morning, Mike.
Thanks for having me, Bernadette.
Okay, now it's time to turn to my guest, Dr. Damien Ng. Good morning to you, and thanks for joining me today.
Hi, Bernadette. Thank you very much for inviting me.
Damien, you've been taking a long, hard look at genomics and the broader biotech ecosystem recently. And one area that you've specifically highlighted is funding. So biotechnology is experiencing renewed investor appetite. What are the key sources of funding for biopharma startups?
Sure, Bernadette, and it's a great place to start simply because funding really shapes the pace of innovation in biotech. I have to say, even though the environment has become more selective, there are 2 major pillars that still provide the backbone of financing for biopharma startups, and they are partnerships with big pharma companies and venture capital. Now, let's take a look at big pharma partnerships first. These are incredibly important because they don't just offer cash, they provide validation, expertise, and access to global clinical infrastructure. For a small biotech firm, partnering with a major pharma company can be transformative because it gives them credibility, regulatory support, and ability to run bigger or more complex trials. And interestingly, these deals have been increasing. In 2024, we saw more than 200 strategic alliances with a potential milestone value more than 140 billion US dollars. A big driver is that many pharma companies face large patent expiries later in the decade. So they are actively looking to refresh their drug pipelines by tapping external innovation. Then we have venture capital, which remains essential for early stage companies. So even though venture capital peaked in 2021 and decelerated with higher interest rates, we're now seeing renewed attention into areas like mRNA, gene editing, and AI-enabled drug discovery. At the same time, investors are becoming more selective because at the end of the day, high quality science is still attracting capital from traditional venture capital, corporate venture arms, and specialized biotech funds.
Okay, but as you said, we have seen venture capital funding decline. Mergers and acquisitions, however, seem to be picking up, and this has been going on for over a year now. What's driving that?
Yes, that's right. Because the contrast between venture capital and merger acquisitions is one of the most interesting dynamics in the biotech space right now. Venture capital has definitely become more cautious. After all, higher interest rates mean that investors tend to become more selective, and many prefer companies with clearer clinical data, differentiated platforms, or experienced management teams. So, early stage fundraising, especially at the preclinical level, has been tougher. But on the flip side, merger and acquisition activity has picked up dramatically, and that's because big pharma companies are under real pressure. Many of them face what's often called a patent cliff. Essentially, it means that several of the top-selling drugs are losing exclusivity over the next few years. Now, that poses a huge revenue risk. Instead of relying solely on internal R&D, which can be slow and uncertain, pharma companies are turning to acquisitions to fill their drug pipelines quickly and efficiently. Lower biotech valuations have also played a role. For large pharma, this is a rare window where they can buy high potential assets at more reasonable prices. And certain therapeutic areas such as oncology, immunology, and gene therapy are seeing particularly strong scientific progress, which makes them attractive acquisition targets. So even though venture capital is tighter, the appetite for high quality innovation has not gone away. It's simply shifted toward merger and acquisition, where big pharma has both the resources and the urgency to keep deals moving.
All right, then obviously we can't talk about specific investments on this podcast, but more broadly, what's the outlook for genomics and where should investors be looking?
Genomics is definitely entering a really exciting phase, and the broader biopharma environment has become much more supportive again. Toward the end of 2025, we saw sentiment improve meaningfully as policy visibility increased and investors realized that drug pricing reforms and trade issues were likely to be manageable rather than disruptive. At the same time, the US FDA, or the Food and Drug Administration, continued to perform reliably despite leadership changes, which helped restore confidence. By early 2026, easing macroeconomic pressures, strong equity performance, and early signs that the IPO market is reopening all contributed to a much healthier backdrop. Now, what does that mean for genomics specifically? The big shift is that investors are refocusing on innovation, and genomics is right at the center of that. Sequencing costs keep falling, AI is dramatically improving the interpretation of biological data, and we're seeing meaningful progress in areas like rare disease diagnostics, precision oncology, and gene editing technologies. Large cap biotechs are playing a key role too because their strong balance sheets allow them to keep investing in R&D and remain active in acquisitions. There are still geopolitical questions, especially around Chinese out-licensing to the US. But overall, with the policy overhang fading and interest rates likely moving lower, we think genomics has a constructive outlook in 2026, both scientifically and from an investment perspective.
Damien, great. Thank you so much for these insights. Fascinating developments, both scientifically and, of course, from an investment perspective. And we'll definitely be staying in touch with you on how the genomics story evolves.
Thank you very much, Bernadette, for inviting me to this interesting conversation.
Well, that concludes today's podcast. I'd like to say thank you again to both Mike and Damien for joining me today and to you for listening. I hope you enjoyed the conversation. And please do tune in again tomorrow when Helen Freer will be here as your host with more of our experts to discuss what's moving markets. So don't miss that. Meanwhile, good luck today and goodbye for now.
The information and opinions expressed in this podcast constitute marketing material and are not the result of independent financial or investment research. Please refer to www.juliusbaer.com/legal/podcasts for further other important legal information.